You're listening to AI PRISM from Seoul Economic Daily.
Samsung unveiled its largest ever shareholder return plan. The board approved it. The stock dropped 8%. Pause. The market expected buybacks. It got dividends instead. The KOSPI fell 3.12% on Monday, its sharpest single-day decline in recent memory. A regulatory ceiling is capping how much Samsung can actually cancel. And KOSDAQ active ETFs are rotating out of biotech and into semiconductor parts, quietly but fast. It's Tuesday, August 25th. Let's look at what this means for retail investors in Korea. Samsung announced a 90 to 110 trillion won, approximately $64 to $79 billion. Return on August 21st, more than 5 times its previous annual maximum. Analysts now estimate only 10 to 20 trillion won will go to stock cancellation, constrained by the Financial Industry Act's 10% ownership rule covering Samsung Life and Samsung Fire. The result: Samsung fell 8.70% to 257,000 won, dragging the KOSPI down 215.99 points to 6,696.96, a 3.12% decline. Here's what the numbers show. Matter of fact, Samsung Life holds 8.51% and Samsung Fire 1.49% of Samsung Electronics common shares, a combined 10% that automatically breaches the legal ceiling if Samsung cancels more common stock, forcing block sales by both insurers. In March 2026, cancellation of 73.36 million shares forced Samsung Life to sell approximately 6.24 million shares and Samsung Fire 1.09 million shares via block trades to stay compliant. DS Investment Securities estimates buyback and cancellation at 10 to 20 trillion won, approximately $7 to $14 billion, and cash dividends at 50 to 60 trillion won, approximately $36 to $43 billion in the January execution. By contrast, SK Hynix canceled 40 trillion won, approximately $29 billion, of common shares on August 19th without restriction. Its ownership structure creates no equivalent ceiling. KOSDAQ active ETFs are repositioning. KOACT. KOSDAQ active allocates 62.72% to semiconductor materials, parts, and equipment. Time. KOSDAQ active reached 52.11%, both more than double their weight at listing, cutting biotech from roughly 38% to under 18%. 3 active ETFs saw 19.2 billion won, approximately $13.7 million, in net inflows over the past month. So what does this mean for retail investors? Earlier, we said the market expected buybacks, but got dividends. Here's what that actually means for you. Samsung's 30 trillion won, approximately $21 billion. Q3 cash dividend is confirmed and imminent, but the valuation re-rating has partially unwound, and the 60 to 80 trillion won January decision leaves the share price in a holding pattern until earnings clarity arrives. Short pause. On KOSDAQ, fund managers rotating into Sobugang are chasing earnings visibility over speculation, which is a signal worth watching, not a recommendation to follow. Watch 3 things. Samsung Q. 3 earnings guidance. Free cash flow upside re-anchors the buyback debate. The BOK decision on August 27th. A hike to 3.0% tightens the equity discount rate. And KOSDAQ active ETF inflows in September. Whether the 19.2 billion won monthly pace accelerates will show institutional conviction behind the semiconductor rotation. That's today's AI PRISM, Retail Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.